Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had an okay Wednesday, despite what's going on in the cryptocurrency market and the broader financial landscape. This is going to be our daily cryptocurrency market update, and we've got a lot to get into, guys, so strap yourselves in. We didn't make videos yesterday or the day before, really because we had said everything that we needed to say, and that we were, or I was certainly very busy. So we are where we are, and this has always been on the cards. It's something that we've spoke about coming down to the long-term regression bands and the 200 weekly moving average, and we're currently, a little bit below them and consolidating. And there's real cause for concern in the cryptocurrency market. One trap that I think people get into is they think that, okay, well, it's sold off this much, how much lower can it go? Well, in the landscape that we're currently in, it can still go significantly lower, and that's something to pay attention to. And for those of you that are looking to get out of your positions, I always wait for strength to sell into. So I'll always wait for a rally to sell if I think the overall direction of the market is going down. Because selling, when the market is already capitulating, you've kind of missed that window of opportunity to get out. Hopefully many of you guys that have been following the channel for a while now would have positioned accordingly, expecting this to happen. We've gone in extensively into why this is likely going to happen, and we've really focused on the macro. And one thing that we've been talking about with my Patreon members, for anybody that's interested in joining the Patreon, there is a link in the description, is the likes of the euro dollar, which is kind of a way for interest rates to be speculated on. And there was a huge move to the downside for this, which means interest rates are likely going to be more aggressive and the Fed is going to be more hawkish. There is a lot to get through in this video, so strap yourselves in. I always don't like to make longer videos because I know people don't really want to watch 20, 30, 40 an hour long videos, but I have a lot to say and a lot of valuable things to say that I think people really need to understand, and more importantly, understand the environment that we're in. We're going to talk about where Bitcoin currently is right now, and the fact that round about this 20k range, if you go below 20k, not only are you taking out your prior all-time high in this area of consolidation, you've also got a lot of DeFi protocols out there that are going to experience liquidations in the form of, if somebody's borrowed a certain amount of money, they get margin calls. You've also got that taking place in the actual real world, quote unquote, because you've got loans that are now more expensive to service, income that is, no longer there, given inflation and everything. So it's a really bad situation for all markets. Crypto being a kind of higher beta is really front running this and getting smashed as a result of it. But hopefully many of you guys that watch this channel were prepared for it. It's not about being right or wrong at this point. If I believe something, I'll position myself accordingly. But the real thing for me with this channel is helping people that are new to this market understand it. I'm gonna position myself accordingly based on what I feel, and you guys also should do the same. But we've been presenting evidence on top of evidence of why this market looks weak for months now, and we are where we are. And the thing is, if we get below 20k, ETH goes below a K, and it stays below there, people are going to really start to fumble their positions. And we're already seeing this, and we're going to get into some of the risks. We're going to be looking at a couple of tweets from Dylan Leclerc talking about the likes of 3 Arrow Capitals and how that's a big VC. Many VCs out there are coming under huge pressure because a lot of them have leveraged, borrowed money to invest in the crypto space. Michael Saylor is a big one. And the thing is, those credit lines aren't just bottomless. Certainly when the credit system is getting tighter and tighter in regards to interest rate hikes. Today is a huge day because essentially we've got the Fed coming out and speaking. They've had a 2-day meeting and they're going to be approaching monetary strategy according to what they've came up with and the data that we've received. On Friday and into the weekend, we literally put out warning videos saying the CPI print is catastrophic because it means that the Fed are going to have to get more aggressive. The aggression that we've seen so far from them has caused markets to do what it's done, and we've explained the internal reasons for why the Fed upping interest rates takes liquidity from markets, and in actual fact pushes it into the dollar. Now, if we look at the RSI for Bitcoin, it's the most oversold it's been. And, you know, it can still go lower, but there are support. You got your prior all-time high from 2017. You've also got this area of small consolidation here. You know, there is potentially an upward move coming. And if the Fed come out and say something that may be accommodating to markets, you may get that push to the upside and a rally off the back end of that. For me personally, I'd actually be looking, you guys know I'm about 70% in cash, 30% in crypto. The 30% for crypto has always been to hedge me being wrong on the downside. So if we see a pushback, I may look to exit more crypto and maybe get an 80% exposure or 90% exposure to cash and drop my crypto exposure a little bit, because the period that we have ahead, yes, people are selling because they're worried, but we haven't really seen forced sellers yet broadly, even in retail. I think that comes, and the reason I think that happens is because if you look at what's happening to the consumer in regards to inflation, this is a tweet here from Kelly Evans from CNBC. No joke, the mortgage rate just hit 6.28% today. Beyond words to express at this point. If you were paying 6% and you've previously been paying 2, 3, 1% on your mortgage, that's huge cost on top of your petrol costs, on top of everything. The consumer gets squeezed and it forces more sellers. Not to mention the VC sort of issues that we're having. You know, we've seen a lot about Celsius. Celsius very nearly got liquidated, but they've actually added an additional 9 million to essentially lower their liquidation price to 14K. Michael Saylor released something similar. I'm pretty sure they did have margin calls or small margin calls at 21K. They would have probably borrowed more money to prevent that liquidation from happening. Does anybody else think that that is just a recipe for disaster in regards to the fact that they're borrowing more money at a higher rate, expecting things not to get as low as they need to go for them to get liquidated? You know, and the thing is with liquidations, people don't wait for the liquidation point to take place. They'll get out beforehand, pushing it into liquidation, causing more liquidations, and it's just a really brutal cycle. Michael Burry, and he was wrong at the time, but potentially may have been right now, was talking about how, you know, there is a crash coming, and the reason being is just because of how much leverage there is in the system. And certainly in regards to crypto, it's a very leveraged up space. And when you've taken leverage in debt, or you've taken leverage in the form of debt, you've borrowed money, that debt's becoming more expensive and your assets are going down. You end up in a negative equity territory, which is a word that I think we're going to see come back for the housing market. So crypto is getting hit hard. I know it's hard not to be a buyer here, and, you know, we may dabble in certain altcoins that we've been looking to accumulate that I spoke about on my Patreon. But for now, it's kind of, you know, I don't want to catch a falling knife, and this very much is a falling knife. And today is going to be a pivotal moment, because what the Fed say is really going to matter. It's all about the Fed at this point and what they are going to do moving forward. And if they come out today, 1% interest rate hike, they were looking at 50. People are talking about 75 basis points. I think you're going to get between a 75 and a 1%. They could do a 1.25%. If they do that, markets will absolutely wet the bed. Companies will wet the bed. One thing that I want to point out that I highlighted on my Twitter here, I was saying the bottom isn't in for crypto. We posted this yesterday. Coinbase Global Incorporated on June the 14th, 2020, announced a restructuring plan. Coinbase Global Incorporated's plan involves a reduction of company's workforce by approximately 1,100 employees. Okay, so why is Coinbase, if they thought the bottom was in and they thought the market was going to return and the conditions were going to really support a thriving market, why are they reducing their staff? They know what's coming. They know they're getting squeezed. They know that there's going to be a lot less interest for crypto over the coming months, given everything that's going on. And that's why they're positioning accordingly. In regards to the likes of 3 Arrows Capital, which is an investor in actually some products that I really like, or cryptos that I like. We spoke about Cardano, for example. What's the effects of these guys taking a big hit? Because it's not just Aave that they'd lose money on. They would probably take money out of elsewhere, and some of them are very small projects like Cardano that maybe they may look to take liquidity out of to provide support in other areas. So there's a real knock-on effect that happens with liquidations. I know Maker has some issues. We had Celsius, that drama. They seem to have sort of defended the wolves for now, but it's getting dangerously close. And I know you're saying 14K, but you could get a wick down to 14K. I mean, like I say, Today, if Jerome comes out and he's very, very hawkish, he continues to blabber on about Volcker, and Bitcoin goes below 20K, it's likely you're going to see a cascade of liquidations take place, which could really drive it down. We've been looking for this, but like I say, I don't care about being right and being wrong. And one reason I didn't mind taking a break over the last couple of days was because I thought I'll let the other YouTubers have their time in the sun, even though they've been wrong literally up until the past week. And now they're coming out going, I told you so, this was on the, all this nonsense. It just doesn't help anybody. This channel is about helping you guys grow. And the reason for this channel, and if you go back to the start of my videos when we were sort of in the bear market, the last bear market, we were talking about trying to prevent you guys from making the same mistakes I have. I've made every single mistake in the book when it comes to crypto, having been here since 2017. I had that baptism of fire in 2018, and it taught me a lot. And those lessons have carried through to today and allowed me to position accordingly and take a more cautious approach when it comes to the world of investing. And it's really benefited me greatly. One thing I want to talk about is it's not just crypto. This is the debt market. We had Francis Hunt, the market sniper, and the crypto sniper on talking about the end of the debt-based system. You look at this over 40 years, when was the last time we had a move as volatile as this? There are serious issues with the financial system. And to expect that that doesn't get transferred over to the equity market, the crypto market, it is naive in my opinion. And we're seeing likes of the NASDAQ. We actually called the NASDAQ for going lower a long time ago. You are on your 200 weekly moving average. So there is the possibility that today we could actually see a bounce. And that's something to really bear in mind. And we've also got a critical period ahead with Jerome coming out and speaking. But there's no reason the NASDAQ can't go lower. I mean, if we look at 2018, which is really what I'm doing as an analogy, you can see you did bounce here. So we may get that bounce. That's probably when we're going to look to sell into strength. And then we see that lower capitulation. That's likely coming. And the reason that's likely coming isn't because of necessarily, and there are internal issues with the stock market being overvalued. Still today, actually as overvalued as it was at the dot-com boom. Certainly the tech market. So at the height of the tech market, in terms of overvaluation, you're still there today. And we've already seen the sell-off that we've seen. That suggests to me there's more pain coming across the board. And this is the thing that we're really trying to get people up to date with. The dollar. We called countless times when you had all these idiots on Twitter saying, oh no, this can't last, it's pulling back. We said this is going to turn and you're going to get a higher push here. If you understand the internal demand that is driven up for dollars via hiking interest rates, it's as clear as day, ladies and gentlemen. Dollar strength is bad for the equity market and it's bad for crypto. And you need to get up to date with this and you need to position accordingly. And if we do get a bounce today, which actually could be quite likely, it's not, I think it's going to be very much a relief rally. And that the trend, because we're only just starting to see things break, they need to break a lot more for the Fed to pivot. The Fed pivoting is what we're watching in order to get back into markets. I don't think that comes yet. In fact, I'm pretty certain it doesn't come yet, to be quite honest with you. And I think a rally is exactly that. It's a relief rally. Let's see what else we've got here. We spoke about mortgages. European Central Bank announces emergency meeting to discuss market route. They are looking to up interest rates in July. I already know this. Every time the ECB has upped interest rates, every time Europe has had an interest rate hike, we've been in a recession. 11 years was the last time. Recession is here. There's no doubt about it. Just think, forget your crypto, forget your companies, forget your institutions, forget your equity market. Think about your everyday individual whose prices have already gone up and is struggling to get to work every morning, now having a higher mortgage payment, continued bills. They're getting squeezed from all over the place. Rent's going up. It's not an environment that warrants a flourishing bull market anywhere. And there is, one thing that I'm looking at the moment is I always pay attention to what's doing what. I don't look at just the crypto market. I look at everything. If you look at the likes of gold, for example, it's held up very well in the grand scheme of things. So is that a safety boat? Well, we'll still see. I still think there's an element of fear that kind of grips in and people have to get liquidated first before that becomes a thing. But at the same time, it is showing strength so far. And there's actual cryptos and I'm not going to give you them, but you guys can kind of go through and look that have, if you look at the coin market cap, look at what's showing strength and what's not. That's a good indication of what may be a good investment moving forwards and what may not be. But right now, crypto ain't it, in terms of being a hedge at this point. It's just not. And the reason being is it's just acting very much, pull up the old NASDAQ. I mean, it's just, let's actually change this. Let's get off the, look at that. That's about as in sync as it could be, And you need to see a turning of this before we get, or a decoupling of this before we see crypto as a real viable investment moving forwards in a real downtrending market. And that's what we're in. There's no way to sugarcoat it. Jeremy Siegel says 100 basis points rate hikes is medicine to stop inflation. I don't even think 100 basis points is going to stop inflation. I think it may slow it, but inflation, even if inflation was at 6%, it would be high. Even if it was at 5%, it would be high. They've got a long way to come down, and it needs to drastically come down. And a lot of the issues that they're having with interest rate hikes, by the way, are supply driven. Look at the whole Russia situation. You just shut off one of the largest suppliers to Europe in regards to Germany and Italy, and I think even the likes of Turkey. Huge dependence on Russia. That's been shut off. They've just gone, right, okay, because of what's happening, we're not going to deal with them. I mean, okay, and you're expecting things not to get out of hand and disorderly? I mean, it's very, very simple, really. This is from MicroStrategy denies its recent margin calls against its Bitcoin-backed loan. They did release a tweet. I don't know if they've shared the tweet. I know I shared it on the Discord that I've got. But essentially, they're now saying that they weren't going to have to sell some Bitcoin at 21K. They're talking about their liquidation price at 4K. If Bitcoin goes to 4K, MicroStrategy wouldn't even exist. And it's like, oh, it's all very well and good saying you've got a margin call at 4K, but if Bitcoin goes that way, good luck, mate. That's all I'm going to say. It's really right now about being vigilant, understanding the situation that you're in, and approaching it moving forwards. And like I say, I'm still 30% exposed to crypto, 70% in cash. If we get a rally, that's when I will take more crypto off the table, unless something changes on the macro. Cash, unfortunately, is king. We cannot change the weather, but we can make sure that when it's raining outside, we put a raincoat on so that we don't get drenched. I hope you guys have found this useful, entertaining, if nothing else. Hopefully everybody's all right, because this isn't about being right or wrong at this point. This is about making sure that you guys are safe out there, because the investment game, March 2020 gave everybody a false sense of security. And in fact, markets up to date really have given people a false sense of security. And most of us that are new to investing have never had to experience something like this and aren't savvy with it. That's why your typical crypto Twitter and crypto YouTube crowd has very much continued on the path that they're on. We weren't the earliest to start calling more downside, by the way. In fact, compared to some people, we were quite late. But what we do is when we see the pain ahead, we switch our stance, because we aren't married to a narrative. We aren't investing based on emotions. We're investing based on what we see, what the road looks like in front of us. So that's really all I've got for you in this video. Hopefully it's helped. For anybody that's interested in joining my Patreon, I'm on there every day giving feedback, because it is a paid thing. And people go, oh, I can't believe you started a pay group and there's now a paywall. The reason it's paid is so that I can actually account and spend time there. Time is money at the end of the day. And if I'm getting paid for something, I'm going to put time and effort into it. We still make great content for free on YouTube, like this video here, and like the videos we've been putting up for the past couple of months, talking about this and trying to herd people into that direction. We are not financial advisors, and we cannot tell you what you should do. But what we can do is present evidence and let you guys make your own decisions up. And hopefully, many of you out there have made those decisions. Being a hodler works to a degree, but this is the first time crypto's ever had to experience this. What I will do is show you how I think this looks for Bitcoin. And we've shown you this before, and you get all these guys talking about Apple and Amazon. We've been comparing Apple and Amazon with crypto for years, for pretty much as long as we've been in it. And it wasn't me that first found it. Let's take a look at Apple back in 2018. Oh, sorry, 2008. I'm very good at mixing those. This is what the future of Bitcoin looks like, ladies and gentlemen. So you may have a little rally here, comes back down, marginally lower lows, volume reduction, then we get back into the party and start celebrating. You know, and we all make loads of money together. You can be along for that journey, or you can't be. And if you've got burnt, if you've made wrong decisions, you're not the only one. You're going to do it again, learn from this, move forwards, and, you know, you really harness this. You learn from your mistakes, not necessarily your wins. Your wins come from your mistakes, in fact. That is all I've got for you in this video, guys. Hopefully everybody's all right out there. A bit of a passionate one, because I am very passionate about what I do. And hopefully you guys have a good Wednesday. We'll catch you in the next video. We've got some great guests coming on the show. And we'll keep you up to date on everything as we move forward. Another update today, potentially on Cardano. We'll bring more videos out because now is the time to really be educating people and investing and kind of basing our strategy accordingly on what we think is coming. All I've got for you in this video, guys. Have a fantastic Wednesday, and I'll catch you all in the next one.